The United States Virgin Islands is the perfect place to enjoy sun, sand, great food, unbelievable beaches, a wide variety of water sports, and the relaxation you deserve. So go to usvi.com. Learn all about St. Croix, St. Thomas, and St. John. Each island is special in its own unique way, and all have plenty to offer as you decide where to travel this winter. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy the vacation of a lifetime. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have Debt Destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled 9 Tips to Spring Clean Your Finances. Mike, when we look at getting things squared away to start a year, one really important place is just making sure that your accounts have the right beneficiaries on them to begin with.
Yeah, I've seen this ignored. It's rare that it comes into play, but certainly if you pass away or if your spouse passes away, it's going to make life a lot easier if you've thought about where the accounts go after the fact. I cannot tell you how many times I have seen people leave an ex-spouse, for instance, on as a beneficiary without really thinking about it, or the number of times where people have made changes to their estate plan but not change their beneficiaries.
And a piece that goes along with that you mentioned there is making sure that your estate plan is also updated as well for life events or changes in your family situation that may have occurred.
Absolutely. I mean, not everything is going to have a beneficiary on it, but there's additional confusion there too, right? I change my will or I change my trust, and I don't tell the investment company that manages my 401k or my investment account. Those two things do not talk to each other, and in many cases, the beneficiary will supersede the will, the trust, these things that you think you've taken care of by visiting the attorney and checking all the boxes, but not necessarily depending on how you do it.
Our guide is titled 9 Tips to Spring Clean Your Finances, and there are 2 ways to request it. The first is by calling 800-393-4001. The second is by visiting ArmstrongAdvisory.com. That phone number again is 800-393-4001, or you can request the guide at ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Chuck, Mike, and Tucker here with you on a PCE Thursday. That's right, ladies and gentlemen. It's the release of the Personal Consumption Expenditures Report.
Ba, ba, ba.
And golly gee willikers, I am so excited to cover it with you. I know that sounds kind of mocking, but I actually am. So, PCE is what's referred to as the Fed's preferred measure of inflation. And when we look at the data that we saw this month, it met expectations, coming in at 0.3% for the headline and 0.4% for the core, excluding food and fuel. Now, both of those rates, if you annualize them, are meaningfully higher than the 2% target that the Fed has for inflation. So the question obviously becomes, gee, how come after this S&P 500 futures went from being down 15 points to up 20 points? What gives, Mike? What's the deal? What's going on?
NASDAQ's up a near full 1 percentage point. I mean, a couple things. One, the year-over-year numbers did come in at the lowest you have seen now in...
It's true.
How long? Quite some time. It's been... so 2.4% year-over-year. That's the slowest pace of year-over-year increases since 2021.
I got February of 21 the last time we were that low.
Okay. So year over year, things are still looking pretty good here in spite of the fact that we saw a month-over-month bump. I think the other piece is just that after CPI, this was anticipated that this would come in as hot as it did. So most people recognize that, hey, this was going to go up. And I'm trying to kind of, now that we're a few weeks out from CPI, which... Just to go back then, a huge bump in the price index that you saw there was due to shelter costs. There seems to be some debate among people that keep a very close eye on this as to how permanent that might be. Is it just a restructuring of some of the numbers? The Bureau of Labor Statistics, in fact, even issued an email to some subgroup of their users saying that a lot of it was due to some sort of change in methodology or a way that they account for it before rescinding that notification. And so the fact that this came in alongside those expectations, I think, is contributing to some of the maybe just relief rally of, hey, this at least wasn't worse than we anticipated.
Yeah, and so with where we stand right now, I find some interesting parallels to where we were last September. And in September, we were in a period where we were starting to see over the prior couple months an accumulation of data showing that the economy was slowing. And those of you who are listening then, I'm sure you remember it very, very well because you have nothing else going on in your busy lives, but I'll remind you anyways. We said, look, the next couple months is going to be critical to understanding where this economy is going, because if the current trend continues, the U.S. will probably be in recession by January or February. If the current trend abates, then we bottom out and there's no recession coming in the first half of next year. And what we ended up seeing, in fact, was the trend abating, and in fact, growth bottomed out in late September, early October, and reaccelerated, and we saw a nice, bump in economic growth through the end of the year and even through, the start of 2024. The parallel that I make here is we've got some data points out there that are showing the possibility of inflation reaccelerating.
Yeah.
And I think it's going to be very clear within the next 2 months of data, so, you got to get February and March, by mid-April, we are going to know if there is another inflationary wave on the way, or if the last month or two just looks like an aberration and it's not really anything to worry about. So it's another one of these pivot points that we're entering into, this one related to inflation rather than growth. The economy passed its exams when it came to the growth scare of, Q3 of 2023. There's a potential inflation scare looming in Q1 of 24 here, and we're going to need to see how it does. And I would be lying if I said I had any conviction either way right now. We're going to have to wait and see what the data shows.
Yeah, to that point, right, whether it's CPI, whether it's PCE, the prior 3 months before this set of data on the month of January was showing really across the board an annualized rate of about 2% inflation. It didn't really matter which way you cut it. Most of the data points were coming to that end. Then if you stripped out food and energy, maybe a little bit higher, but still in a comfort zone. And when you include the January data now and annualize the last 3 months, you're getting back into that high threes or over 3 rate for core prices. And yeah, to your point, if that continues, then well, we've talked about how this stock market today seems to be pricing in perfection. If you don't get that, then you have to push off further the Fed rate cuts. You have to push off a lot of the things that have motivated investors to jump into stocks with both feet so far this year.
Yeah, and you look at core CPI, it pretty much bottomed last June in terms of not the 12-month number, just because the 12-month number is factoring in still some stuff from early 2023 where it was running really hot. The 12-month number probably, like, when we look at what's coming over the next few months for core CPI right now is running at 3.9 over the last 12 months. But when we look at the numbers we're going to be replacing soon, February of 23, core CPI was 0.47. So if you get anything less than that, the 12-month number comes down. March was 0.32. April was 0.47. May was 0.36. So you average all that out, and you're pretty much at like 0.4. Even if you just average 0.3 for the next 4 months, core CPI annually is going to come from 3.9 down to 3.5, just because you're replacing these very high readings.
Yeah.
But the problem is, if you average 0.3 for the next 4 months, now you got a 6-month trend that's running at like 3.6, 3.7% inflation.
You just can't cut rates in that environment.
You can't
absent
cut rates.
Absent a recession, you can't cut rates there.
No, it's not a case where you say, gee, we need to hike rates, but it certainly is not something where you say, gee, we need to cut. So I think this is why I say the next few months is going to be important. And if you get some progress there, okay, we can talk about rate cuts then. And I want to be clear. I do think there is a legitimate path to rate cuts being on the table by the middle of this year. And it is something where you need kind of an inside straight in terms of how this is going to work out. But it's a plausible path. It's not unreasonable to say there's a path there. But it also requires a reversal of the trend for the last 6 months on CPI, on core CPI, and the last 2 months on PCE. And that's why when we look at this, there are some questions here. And if the trend continues that we have seen the last few months, specifically since November, December of 23, then there's going to be some pushback on these rate cuts, and the next move looks like rate hikes in that case.
We saw personal income spiking in the previous month. I wonder if this is much just due to raises and Social Security adjustments and things along those lines, or if there's anything meaningful to it, because it was the biggest income spike in over a year.
Yeah, don't know. Don't have anything that I can,
I will say that the
government's
the Bureau of Economic Analysis's comment on this, that it primarily reflects increases in government social benefits, personal income on assets, and compensation, had me kind of scratching my head. Like, what else is there in terms of personal income if you're saying that it was primarily caused by these three things? So, you could see this being something that is, pretty attributed to annual raises and Social Security and might not be all that meaningful. But interesting to see.
Yeah, it bears watching in terms of, hey, does this turn into anything else? But what I will say is the personal income side has been pretty tame really since last April. We've got 9-10 months where this is the only outlier where you say, oh, like there's something interesting there. Again, why personal income matters, it's not that we don't want incomes to go up. It's that if incomes go up without corresponding supply going up, then you get inflation because now you just have more dollars chasing the same amount of goods.
See 2022.
Which is not ideal. Let's take a quick little break here. When we come back, let's talk a little bit about what some Fed members are saying about the inflation picture, and then we'll talk about the employment picture when it comes to the tech sector and why layoffs keep popping up for tech companies.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network. Your next incredible vacation is just a click away. The United States Virgin Islands is the perfect place to enjoy sun, sand, great food, unbelievable beaches, a wide variety of water sports, and the relaxation you deserve. So go to usvi.com. Learn all about St. Croix, St. Thomas, and St. John. Each island is special in its own unique way, and all have plenty to offer as you decide where to travel this winter. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy the vacation of a lifetime. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
To be engaged, you must feel included and valued. The DAV Department of Massachusetts nurtures a culture where inclusiveness is a reflex, not an initiative, where there's a deep sense of pride, passion, and belonging that is unified in our shared commitment, dedication, and patriotism for our country. We know through experience that different ideas, perspectives, and backgrounds create a stronger and more creative organization that delivers better results for the veterans and families we strive to assist. For more information, visit davma.org.
Protecting your assets is the key to a sound estate plan. Cushing & Dolan's new guide is called Back to the Basics, a complete guide to an estate and asset protection plan. In it, you'll learn about important issues like avoiding probate and potentially eliminating your estate taxes. Call 866-848-5699 right now and request your free guide today, or request it online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Planning for your financial future never stops, and with spring on the way, right now is the perfect time to take stock of your overall strategy. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and our new guide may help. It's called 9 Tips to Spring Clean Your Finances. If you're planning a significant purchase either this year or down the road, we've got important information to share that will help you understand the effect it may have on your finances. You may be retired or getting close to retirement, and if so, this guide is for you. Take the necessary time now to review your financial strategy and learn about what adjustments you can make that might benefit your planning. The guide is free and it's yours today by calling 800-393-4001. That number again is 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Estate and asset protection are the keys to a successful retirement. Cushing & Dolan are experts in elder law, and if you're ready to start your planning or need a refresher done on your existing plan, you need to get their new guide called Back to the Basics, a complete guide to an estate and asset protection plan. In it, you'll learn strategies to help you protect your assets from probate, as well as the nursing home. We'll also show you how to properly create your will and set up your beneficiaries in a way that will ensure your family's security for the long term. Call Cushing & Dolan right now at 866-848-5699 and get your free guide today. Proper estate planning is not easy. There are many necessary elements that you'll need to include to give you the peace of mind you want as you prepare for your later years. That number again is 866-848-5699. 866-848-5699. Or you can request the guide online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Get up-to-the-minute market updates with Wall Street Watch, weekdays at 10:30, only here on the Financial Exchange Radio Network.
Reserve Bank President, Federal Reserve Bank of New York President, rather, John Williams, again, the bank president, not the composer, he said,
Have you been doing this recently with anything John Williams related? Is this the first time? This is good. This is good. I like it.
now witness the power of this fully functioning, I can't do it, whatever.
Is this the only reason that we are covering this story? Because I'm just a little tired of covering every time a Fed president speaks, but I know that we sort of have to. They're concluding anything that we haven't already, which is you can't cut rates yet because inflation's still kind of there.
No. Nothing
Right?
new.
Nothing new. It's the same story. I know we have to cover it. There's nothing new here. There's a path to cutting rates, as we mentioned. Inflation needs to come down further.
It all comes back to what I still think is like the golden question to ask when looking at markets and investing, which is, hey, is what I'm seeing temporary or permanent? And if you believe that what we're seeing in the inflation data for January is the start of a new shift, not necessarily permanent, but like longer than 1 month, all right, you got reason to be concerned that rates need to go higher. If you think it's temporary and just a blip and a bump on the way down to 2%, all right, then you got nothing to worry about is kind of the message there.
Yeah.
But, look, I don't know. As I've said, we're going to need a couple more months of data in order to figure this out. I think there is an ample possibility that inflation reaccelerates. I think there's an ample possibility that this is a blip, and it's okay to say that you don't know. Like, you don't always have to – if you always have full conviction on everything, well, then you don't actually have full conviction on anything.
Yeah, and you have to ask yourself, do you have some sort of advantage on knowing which way this is going right now?
No.
Right? I don't. I don't think many do.
What I will say is the underlying inflation metrics, things like median CPI, trimmed mean CPI, trying to figure out where the dispersion is and where, most things are pointing, they're not pointing in a great direction right now. Does that mean that you're definitively going to keep moving up from here? No, but there are some things out there that bear watching and you have to pay attention to, and we're going to know more in the next couple months.
Yeah. Counterpoint is other metrics of the pretty dominant source of inflation right now are reflecting deflation, actually, when it comes to the housing, when it comes to shelter costs. So you think that at some point that feeds in, but you can't pick out individual pieces and say definitively what's going to move it one way or the other.
Mike, I want to talk a little bit about tech and specifically the continued presence of layoffs in the tech sector. First thing that I just have to say is just from a morale perspective, it's just got to be very difficult right now working with that sword kind of hanging over your head like, gee, is this going to be the quarter that my company announces additional layoffs? Because it's just kind of been a rolling thing for the last 18 months in tech these days.
Yeah. You see it. You saw it first right in the recruiting departments where they, started there and started getting rid of some of those employees. And especially if you're not working on something artificial intelligence related right now, you do have to be kind of scratching your head saying, wonder just when that sword is going to fall. That having been said, I think the Wall Street Journal does a pretty good job with this piece of trying to explain. Well, my conclusion is that, there have been announcements of layoffs, but when we talk about how big these companies are now, it's just not all that significant. So there's been announcements of 70,000 layoffs so far since the end of 2023.
Yes.
And that is a significant number of jobs, but you take a look at the growth of these companies over the last few years, many of which have doubled their headcount, and that can't represent more than a couple percentage points of total headcount across all these companies.
No, the only one that's really meaningful is Meta, formerly known as Facebook,
right,
which has actually, gone through and cut, 20% plus in headcount there, even there because of how quickly they were growing headcount. they're still back to like 2020 levels. It's not something where there's been a big shift. Alphabet is an example. Google, I'm never going to call them Alphabet because it's just a stupid name. Google is, they're at 182,000 employees. That's still 20% more than they were at in 2021. It's just down from the peak in 2022.
Yeah.
Microsoft, yes, they've actually announced 13,000 layoffs, but they've not actually reduced headcount. They've just added those people somewhere else after cutting from other departments. Maybe it's in AI, maybe it's in other places. So Meta's the only one that you can point to where you say, yeah, they've meaningfully reduced headcount there.
Can we talk about the last chart in this story? So they separately, this doesn't really have to do with the layoffs, but separately are reporting on the revenue per employee. And they look at the percentage change in revenue per employee since 2019. I thought this was an interesting chart. Meta actually tops that list there of revenue per employee and the growth that you've seen at nearly 30% there, followed by Apple, Alphabet, Netflix, Microsoft, and Amazon. And at first I was saying, okay, revenue per employee being up even 10% over the last few years, that's pretty significant. But this is likely not inflation-adjusted data. And so taking a step back here, you think about, okay, revenue per employee going back to 2019. As a baseline, you would probably want to be seeing that increase by 20% because wages have increased by almost that much, and certainly your costs have increased by about 20% over that 4-year time period. So, again, interesting metric, but inflation-adjusted, your revenue per employee is actually probably negative at Netflix, Microsoft, and Amazon.
So this is part of my thesis for why later this year, not just in tech but in other areas, we may start to see headcount reductions, is because for the last couple of years, companies have been able to say, okay, I've got to pay my people more, but I can pass that on in higher prices. I keep coming back to the story about the French grocery chain that said, no, we're not carrying Pepsi anymore because the price hikes are too much and our customers are getting upset. The way that companies deal with this, if you can't maintain margins through price hikes, you got to maintain margins through cutting cost in your fastest rising cost center. And your fastest rising cost center right now is employees, not material costs and things like that. And so if that's the case, I do think the thing you got to watch back half of this year, do you start seeing companies not in tech that cut headcount in order to maintain margins? I don't know if you will, but it's a theory that I have out there as to something that you may see in the second half of this year, because we're starting to see some pressures building for companies to need to maintain margins, and they can't do it through just hiking prices anymore.
Yeah, that pricing pushback is definitely real in a different way today. You're right. They had that pricing power throughout 2022, even arguably for a large portion of 2023. And I don't know, the reaction that you seem to be getting when companies are announcing price increases right now or shrinking their products in order to maintain margins or whatever it might be, it's a pretty stiff pushback. Or at least that's the way that I'm feeling personally and I'm seeing on social media.
Yeah, I mean, look, I'll tell you what. I found out I was getting hosed on my deli meats. I'm buying cheaper deli meats now. You gotta give the people the roast beef they want. Am I right?
I guess so, Chuck. I guess so.
Let them eat cheddar cheese, sliced thinly, but not too thinly, because then you have to put too many slices on. Let's take a quick break, and when we return, we got Wall Street Watch after this.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Hi, this is Susan Powers from the Armstrong Advisory Group. With spring on the way and taxes due soon, now's the perfect time to review your overall financial plan, and our monthly guide may help. It's called 9 Tips to Spring Clean Your Finances, where we outline numerous issues that may affect you going forward, like evaluating any income changes for the upcoming year. It's important to understand how a difference in income might affect your long-term planning. Even if you're comfortable with your current plan, taking stock of potential adjustments may help further secure your assets in the future. future. Learn about this and other important strategies in our new guide called 9 Tips to Spring Clean Your Finances. Get your copy today by calling 800-393-4001. That's 800-393-4001 or request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Your next incredible vacation is just a click away. The United States Virgin Islands is the perfect place to enjoy sun, sand, great food, unbelievable beaches, a wide variety of water sports, and the relaxation you deserve. So go to usvi.com. Learn all about St. Croix, St. Thomas, and St. John. Each island is special in its own unique way, and all have plenty to offer as you decide where to travel this winter. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy the vacation of a lifetime. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about the basics of estate planning. Todd, what happens if you don't have a healthcare proxy in place and your spouse needs nursing home care?
So this is a basic document that we don't talk about as much as we should. It allows you to appoint somebody else to make a medical decision for you. And by the way, it's not just one medical decision. It could be any number of things, from prescription drugs to doing a surgery. And yes, the most important one, which is, hey, if all hope is lost, I don't want to, be on a machine. But that's the basics, and you do need it for that. But the bigger point is, if you enter a nursing home and you don't have one of these, you're not going to be able to admit them. You're going to have to go get a guardianship in order to admit them to the nursing home, because they're not going to allow you to do that. So very important that you have one for that. Now, guardianships are time-consuming and expensive. You got to hire a lawyer. You got to go through a lot of nonsense, right? If you have this basic document, which you should have for anyway, just for your basic purposes, having it not only for those reasons, but to help you get into a nursing home if you need to, is essential.
Learn how you can avoid probate, eliminate estate taxes, keep your money in your family, and protect your assets from the nursing home. Request the brand new guide from Cushing & Dolan. It's called Back to the Basics. 866-848-5699, or you can request it from their website, legalexchangeshow.com. Cushing & Dolan have been helping families like yours for more than 30 years. Call 866-848-5699, or request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, markets are trading mostly higher, although the Dow is flat. as traders react to a fresh look at inflation this morning, where the core PCE index rose 2.8% from a year ago, in line with estimates. Right now, the Dow is off merely 21 points, S&P 500 up nearly 1/3% or 14 points, and the NASDAQ is up by 2/3% or 100 points. Russell 2000 up over 1%. 10-year Treasury yield pulling back by 4 basis points, now at 4.23%. And crude oil down about 0.25%, trading at $78.32 a barrel. Best Buy shares up by 5% after the retailer beat holiday quarter earnings and revenue expectations, despite a period of tepid consumer electronics demand. However, the company did provide a softer-than-expected full-year guidance. Meanwhile, Salesforce exceeded street forecasts for the fourth quarter, but provided a weaker-than-expected revenue outlook for the new fiscal year, where the cloud-based software giant expects single-digit revenue growth. That stock up by nearly 1%. Sticking with the cloud space, where Snowflake shares are dropping 19% after the cloud data company revealed product revenue guidance for the first quarter that disappointed. Furthermore, its CEO, Frank Slootman, announced that he was retiring. In turn, Morgan Stanley downgraded Snowflake stock to equal weight. Elsewhere, Okta posted better-than-expected quarterly results and outlook for the current period. Bank of America also double upgraded the stock to a buy rating. That stock up by 21%. AMC Entertainment shares plunging by 11% after the movie theater chain beat street revenue forecasts, but posted a larger-than-expected loss. And Paramount Global revealed a surprise profit for the fourth quarter, sending that stock up by 5%. The media company also added that its streaming service Paramount Plus added 4.1 million subscribers, bringing its grand total to 67.5 million subscribers. And on Tuesday, CNBC previously reported that Warner Brothers Discovery is no longer pursuing a merger with Paramount. I'm Tucker Sylvan. That's Wall Street Watch.
Mike, we've got a piece in the Financial Times. It's titled, "This is not a remake of 1999 for markets," and it's making the case that, hey, even though things look a little bit stretched, it's nowhere near as bad as the tech bubble was. Your thoughts?
I guess first thing, they disclosed this in the article, but it's an op-ed from the chief investment officer of Julius Baer, who I've never heard of. I'm taking a look at their website right now. They do investment management and wealth planning, among other things, apparently. So, first things first, let's understand the potential conflict here, which is this could be a firm that is completely long equities and long tech in their own portfolio, and that part isn't disclosed as part of this article. So, want to start there. My general thoughts are they make some compelling arguments, and I've been hearing more and more of these arguments from presumably investors who are long tech about how this time it's different and how it's not like the tech bubble of 2000. And I'm sure that if it is, it won't be like the tech bubble of 2000, because rarely do we see instances of history exactly repeating itself. I think that I would argue that, okay, it's probably not exactly like the tech bubble, but there are certainly shadows of that period or other periods of high valuations in different segments of the market right now.
Yeah, and so I think that in looking at this and trying to make sense out of, what we're seeing, and is this, similar to the tech bubble or not, I think that it's important to note that, and I've mentioned this before, in the tech bubble, you had a bunch of companies that were really profitable and did really well, but were just priced too highly. And it's not to say that this is what we'll necessarily see this time or next time or any other time, because, again, none of us really know. But you can look back to the tech bubble and say, hey, in mid-2000, Intel, Microsoft, and Cisco were all really, really profitable companies. Like these weren't the crap that people were buying.
Sure.
They were good companies. People were just paying too much for them because they were paying 194 times earnings for Cisco. They were paying 59 times earnings for Microsoft, 55 times earnings for Intel. None of those companies went out of business. Intel, Microsoft, and Cisco have gone on to make billions in dollars in profits in the next 25 years after 2000, 24 years, however, 23 years and 2 months. But when we look at companies today and say, gee, like, is this concerning? Hey, Microsoft, just as an example, it's trading 36 times earnings right now. Yes, it's not as bad as the tech bubble, but it's still elevated relative to where it has been long term. And you're also talking about a company that's only growing revenue a few percentage points a year now. It's slowing down at this point, and it's not to say they're going to go out of business, because I don't know how I would, survive, quite honestly, if they did. My entire life would change because my entire work would change. But hey, there's something that's a little funky there. NVIDIA, we've talked about how they're printing money left and right. Like, not a company that looks like it's going out of business, but you're trading 66 times earnings.
Yeah.
It's not just because something's not as bad as it was in the tech bubble, when NVIDIA, by the way, who was around then, was trading 200 times earnings. Okay, I mean, NVIDIA's stock, if you take a look at how it performed in the subsequent decades, before the last 5 years or so, it was kind of messy for them. I mean, it was not something where you just look at it and say, hey, everything was, all on the up and up. NVIDIA's stock back in the original tech bubble hit a split-adjusted price of $7.80 a share back in 2001. It didn't get back there until 2007 very briefly, and then it basically didn't go anywhere for a while. I mean, it was trading as low as $5 a share in split-adjusted numbers as recently as September of 15. So NVIDIA stock was dead money for 15 years after the tech bubble. It's only recently that it's become this, behemoth and this market-powering force. So, yeah, I are things not as bad as the tech bubble? Sure. Could this all work out just fine? Also, sure. I don't know what's going to happen. But what I do know is that when you're trading at multiples like this, you need a lot to go right in order for your growth to continue. And NVIDIA, I keep coming back to this one because it's NVIDIA is getting to be kind of a like the cab driver problem, where like you get in the cab and the cabbie's like, hey, do you own any NVIDIA stock? Like it's getting to be that almost. NVIDIA.
Sorry, go ahead.
Sorry, just one last thing on them. They were trading at about $325 a share at the end of 2021. Their revenue growth, again, one of the main things that we're looking at here in 2022. If we look, sorry, I had Intel up. Just let me pull NVIDIA for a second on this. Their revenue growth just slowed in 2022. It wasn't something where we ended up, seeing, this huge drop in revenue or anything. They saw like a 10% drop in revenue for a brief period because of crypto winter. You remember that whole phrase?
Mm-hmm. Yeah.
And NVIDIA stock dropped 60% in response. Because things were priced like nothing was going to go wrong. And this is the risk that you run, is not that NVIDIA goes out of business. Maybe they do. I think it's really unlikely that they do. The risk that you run with this is, hey, if revenue stops growing at 265% year over year, which at some point it will, because right now, out of big tech, 50% of their CapEx is going to AI chips, and that's just not sustainable forever. At some point, it's going to shift there. And so that revenue growth can only go on for so long because there's only so many dollars to spend. Like, if the entire U.S. economy is $28 trillion, how do you get to NVIDIA doing, $20 trillion in revenue?
Right. Yeah, I get very hesitant when I hear arguments like, oh, artificial intelligence is different. It has real applications that matter. And I hear those arguments every once in a while, and I really take a step back and say, yeah, it might be different than 3D printing or self-driving cars, but is it different than the internet? I'm in terms of impact on society, I hesitate
right, like
with that
Pets.com
argument.
was a great idea. It just didn't execute. We know this because Chewy.com worked
right
20 years later.
The other piece, though, that I've heard, and I'm interested in your take, Chuck, is I feel that 2021 felt a little bit more like the tech bubble than right now does. In terms of just outlandish claims by companies and reasons for people making investments, 2021 felt a little bit more like that bubble to me than this exact moment in time. The
I mean,
SPAC
look,
craze of 21. It
yeah,
was
we
pretty
we were
outlandish.
we were awfully spectacular back in 2021. This is more
Doesn't mean this isn't problematic. Just, I'm thinking about these two recent scenarios.
This feels so if 2021 and the timelines match up, and I'm not a big proponent of like direct comparisons because, as you said, like they're all a little off. Like nothing's history rhymes; it doesn't repeat. 2021 looked a lot like 1999, where you could just put a .com in your name. In this case, like you put an EV in your name or a crypto in your name, and it was just off to the races.
Yep.
This year, you do have that. Like if you put AI in your name, you're kind of getting that. You're kind of getting that. But this is more like the echo that we saw in 2001, where, hey, like it's all clear. We washed out the 40% drop, and now we can keep going. Yeah, I don't know. Like when you see companies that release just fine earnings that are nothing special, and the company doubles in 9 days afterwards, like ARM did a couple weeks ago.
Fair.
It's
Fair.
There's some stuff that's a little dumb. And look, if I'm being honest, in bubbles, sometimes dumb makes money. It has to this point for the last 4 or 5 months in particular. There's a lot more money to be made in bubbles riding them on the way up than betting when they're going to pop. Like I don't. No one has any idea when it does. I mean, you still don't know. Are you in 1997 right now, in 99 or 2001? I have no clue. I don't profess to know exactly how this is going to unfold, and so what I can tell you is that the people that have felt the most pain for the last year have been the ones saying this is a bubble, it's going to pop. At some point that shifts, but it only shifts once those people say, okay, maybe it's not, and then max pain is the other way. It's, oh, gee, now that I've, finally accepted this market, then it turns against me. I don't know when we get there, but it's there's concerning stuff. Is it as concerning as 99? I don't know. Like,
tough to compare.
Who cares?
Yeah.
It's not really a relevant thing. All that matters is what it's doing now. Let's take a quick break. When we come back, we're talking Bitcoin, and then we are talking Chinese EVs and whether or not they're going to be making inroads in the United States.
This is your home for the most comprehensive coverage of the economy and the trends on Wall Street. This is the Financial Exchange Radio Network. Estate and asset protection are the keys to a successful retirement. Cushing & Dolan are experts in elder law. And if you're ready to start your planning or need a refresher done on your existing plan, you need to get their new guide called Back to the Basics, a complete guide to an estate and asset protection plan. In it, you'll learn strategies to help you protect your assets from probate, as well as the nursing home. We'll also show you how to properly create your will and set up your beneficiaries in a way that will ensure your family's security for the long term. Call Cushing & Dolan right now at 866-848-5699 and get your free guide today. Proper estate planning is not easy. There are many necessary elements that you'll need to include to give you the peace of mind you want as you prepare for your later years. That number again is 866-848-5699. 866-848-5699. Or you can request the guide online at legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
There's no bad time to review your financial planning strategy, but with spring coming soon, the perfect time is right now. Hi, this is Chuck Zodda from the Armstrong Advisory Group. Our new guide is called 9 Tips to Spring Clean Your Finances, and it's packed with information about planning for a one-time expense this year, like a new car or family vacation, and how that purchase might affect your finances. We also look at how to plan for major future expenses, like a new home or a child's college education. Take the time now to address any issues that may affect your financial strategy and spring clean your finances. The guide is free, and it's yours today by calling 800-393-4001. That's 800-393-4001, or you can request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. resources. Your next incredible vacation is just a click away. The United States Virgin Islands is the perfect place to enjoy sun, sand, great food, unbelievable beaches, a wide variety of water sports, and the relaxation you deserve. So go to usvi.com. Learn all about St. Croix, St. Thomas, and St. John. Each island is special in its own unique way, and all have plenty to offer as you decide where to travel this winter. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy the vacation of a lifetime. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
Text us 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we're covering. This is the Financial Exchange Radio Network.
Mike, there's a piece in Bloomberg today. It's titled Bitcoin ETF Shake Up Crypto Market After Storming Wall Street. And I don't know. I mean, I remain kind of skeptical that this is anything huge. I mean, yes, they saw one day of very higher volume yesterday, where they saw about $7.7 billion in average in trading volume for the top 10 Bitcoin ETFs. But other than that, they really haven't gone north of $3 billion, meaningfully on any days over the last month and a half that it's been here. I don't know. I mean, I don't really think you can look at one day and say, hey, like, this is a thing now.
Yeah, I think our initial take was, look, these things got released and they just didn't attract all that much in terms of excitement. Nonetheless, it's certainly true that, hey, Bitcoin price is within spitting distance of all-time highs. How much
price is driving it?
Right. How much of the ETF announcement is driving that? I don't know. I'm with you. I think time still has to be play out here and see how much really U.S. investor interest in these things there really is. I think you still have to give it more time to play out. Chuck, happy Leap Day, by the way. Once every 4 years, we get one extra day in February. And do you know what that means?
No, what does it mean?
It means we have one extra day to get the Armstrong Advisory Group guide for the month of February. Usually we have to give this away yesterday, but the last day to get it is actually today. We've got a brand new guide for the month of February on tips to spring clean your finances. And, we're all getting to that time of year where we start pulling out the list and try and check a few things off of it. And frankly, this is just a great way to do that exact same thing with your finances. We cover all sorts of things from confusion around estate planning versus beneficiary designation, insurance coverages, how to tackle and assess your monthly subscriptions. And if you're looking to, take a really achievable list into the spring and really start to focus on definitive steps you can take to spring clean your personal finances, request a copy of our brand new guide from the Armstrong Advisory Group. You can get it by calling 800-393-4001. Again, it is the last day of February, so the last day this guide is available both online and by calling. The phone number, again, for the Armstrong Advisory Group, 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
President Biden ordering an investigation into whether Chinese connected vehicles, including electric cars, pose a security risk to Americans. Hint, they probably do.
Well, they probably would if you could buy one in the United States. I think that's a pretty important distinction.
This is the big thing, is that you've got Chinese manufacturers that are itching to get into the U.S. market, and the question that is being asked right now is, hey, should these vehicles be allowed into the U.S. market? And even before that, okay, are you going to see what happened with, places like the steel industry, where Chinese companies just made a ton of steel and then dumped it internationally to wipe out foreign competition? Are you going to see them undertaking similar strategies with how they build and disseminate EVs? And if so, do you build some kind of tariff strategy so that you don't have $8,000 EVs floating around that people are like, oh, gee, I'll buy this, and putting domestic manufacturers out of business just because Chinese regional or national governments are subsidizing to an insane degree.
Yeah. Again, it brings up this interesting question. Is this a national security concern, or is it a unfair trade practice concern? Is it both?
It's both.
It can be both. But what's the true weight, right? We've had the same conversation about battery technology, about semiconductors, about renewable energy sources.
This is different, though, because a battery doesn't track you.
A TikTok app does.
Yes, but that's not a battery.
Yeah.
I mean, look, I've said before, I don't think TikTok should exist in the U.S.
Yeah. It's an interesting conversation. I hope that Chinese cars don't make it into the United States. They already face a 20+% tariff, I believe, so tough to envision how it would work. But, yeah, I buy the national security concerns.
I buy that. I buy a whole lot of different concerns on this, including, further potential erosion of the U.S. industrial base as well. Let's take a quick break here. When we come back, Hour 2 of the Financial Exchange is coming up.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled 9 Tips to Spring Clean Your Finances. Mike, one of the things people need to look at starting out a year is whether or not they expect a major shift in their income, either higher or lower.
Yeah, I mean, a lot has changed in terms of how we work and just family dynamics over the last few years coming out of the pandemic, and you've seen a lot of people jump back into the labor force that might have gotten out, or the opposite of that. And certainly it comes and impacts everything from 401k contributions to how much you're going to be able to save and put out for the next year. And so just understanding where the income side of that budget is going to land for 2024 and doing that evaluation is an important step of the process.
The other piece to pay attention to is the expense side of things. In particular, if you have one-time expenses that are going to be coming up, if you need work done on the house, if you've got car expenses or anything else, make sure you plan for that as well.
Well, how are you going to finance it? Do I have an emergency fund? Am I going to borrow money for a home improvement that I'm doing? Maybe I'm already retired and I'm on a fixed monthly budget from Social Security and maybe a pension, and I've got some big expense coming up. You might need to realign your portfolio for that coming expense. And so really just, again, comes mainly down to budgeting here, but thinking about where those income and expense numbers are going to land for the full year.
Our guide is titled 9 Tips to Spring Clean Your Finances, and you can request it 2 different ways. The first is by visiting ArmstrongAdvisory.com. The second is by calling 800-393-4001. That number again is 800-393-4001, or you can visit ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Are you retired like me and you just found out you owe the IRS a ton of money? Well, what would your life be like if they took your retirement savings away from you? They can do it, and your property. If you owe the IRS back taxes or you haven't filed in a while. The Tax Relief Line is here to help you. They can stop the IRS from taking your retirement savings. If you qualify, you could have your tax bill reduced to zero. That's right. If you're retired and you owe the IRS a lot in back taxes, you could have your entire tax bill reduced to zero due. The IRS has now hired thousands of new employees, so they're ready to come after you. Don't let them take your retirement savings or property. Make this free call now.
800-251-2153. 800-251-2153. 800-251-2153. That's 800-251-2153.
This is the Money Matters Radio Network. WBNW 1120 AM and W275CM FM. Concord, Boston. The Money Matters Radio Network.
Do you use the expensive blue or yellow pills to charge your sex life? Are you thinking about it? What if we can promise you the same results for less than $3 a pill? If you're paying $20 a pill for the other pills, you're getting taken to the cleaners. Our pills deliver the exact same results for less than $3. You'll save more than $16 a pill for the same results. And right now, radio callers will get 44 blue or yellow pills for $120 with free discreet shipping. You can save more than $700 off pharmacy prices. Charge your sex life now and save a ton of money. Call now and get your 44 pills and save over $700 and qualify for free shipping. Stop overpaying and call right now.
Paid for by Steel Man Pills. 800-475-8547. 800-475-8547. 800-475-8547. That's 800-475-8547.
If you served in the Marine Corps, by now you know about the contaminated water problem at Camp Lejeune. If you were stationed or worked at Camp Lejeune from 1953 to 1987, you probably have a lot of questions. We have some answers. You could be entitled to compensation. Billions of dollars are being allocated to pay for damages to anyone stationed at Camp Lejeune during that time. Unfortunately, it appears that officials may have known the contaminated water problem existed and did little to protect their men. The Semper Fi code was not honored. If you or someone in your family has developed a serious illness, including various forms of cancer, call this Camp Lejeune legal support line right now. You can't turn back the clock and change what happened, but you can certainly call right now and learn your rights as a Marine. Here's the number.
800-477-1736. 800-477-1736. That's 800-477-1736. Paid for by Legal Alert Line.
Hi, this is Susan Powers from the Armstrong Advisory Group. With spring on the way and taxes due soon, now's the perfect time to review your overall financial plan, and our monthly guide may help. It's called 9 Tips to Spring Clean Your Finances, where we outline numerous issues that may affect you going forward, like evaluating any income changes for the upcoming year. It's important to understand how a difference in income might affect your long-term planning. Even if you're comfortable with your current plan, taking stock of potential adjustments may help further secure your assets in the future. Learn about this and other important strategies in our new guide called 9 Tips to Spring Clean Your Finances. Get your copy today by calling 800-393-4001. That's 800-393-4001, or request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange and Veterans Development Corporation are proud partners of the Disabled American Veterans Department of Massachusetts. The DAV provides thousands of hours of voluntary services at our DAV medical centers and is the only DAV department in the country to lead a veterans housing initiative for single veterans and for those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit davma.org. That's davma.org. Protecting your assets is the key to a sound estate plan. Cushing & Dolan's new guide is called Back to the Basics, a complete guide to an estate and asset protection plan. In it, you'll learn about important issues like avoiding probate and potentially eliminating your estate taxes. Call 866-848-5699 right now and request your free guide today, or request it online by visiting LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
To be engaged, you must feel included and valued. The DAV Department of Massachusetts nurtures a culture where inclusiveness is a reflex, not an initiative, where there's a deep sense of pride, passion, and belonging that is unified in our shared commitment, dedication, and patriotism for our country. We know through experience that different ideas, perspectives, and backgrounds create a stronger and more creative organization that delivers better results for the veterans and families we strive to assist. For more information, visit davma.org.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Little bit after 11 o'clock here on a very special, very happy leap day. That's right. It's February 29th here. And Mike, I thought just to kick this hour off, we could go through the leap day rules or the leap year rules again, just to make sure we're all clear on them.
You have to jump everywhere you walk.
What's that?
You have to jump everywhere you walk? I'm not sure what you're talking about.
I don't know if there's rules.
Here's how leap year actually works, and I'm going to quote here, because this is how the Julian calendar actually works.
Excellent.
Every year that is exactly divisible by 4 is a leap year, except for years that are divisible by 100, but those years are leap years if they're exactly divisible by 400.
You lost me.
So what it means is that the years 1700, 1800, and 1900 are not leap years, but 2000 is because it's divisible by 400.
Yes.
So that's why we had a leap year in 2000 and didn't skip it. The reason that this works is because the actual calendar year of the Earth is 365.2425 days, and so by skipping leap year 3 times every 400 years, you're able to get the right number. You're actually able to keep leap year in balance.
Okay.
Thank you.
I just wanted to let people know that in the year 2400, we're not going to have a leap year, so don't be looking forward to it.
All right, so for everyone...
2400 we will.
For everyone now living...
Sorry, Mike, 2100 we will not have a leap year.
For everyone, just about everyone now living, there'll be a leap year every election year.
Except in 2100.
Yeah, so, for those that are being born right now and live till 86...
Mike, there's a lot of people born in the last 10 years who are still going to be here then.
They are.
Especially advances in modern medicine.
Yeah.
You know?
I intend on living to 150.
Just imagine what I'm going to be like once I get my Neuralink implant.
Even worse.
Probably worse than before. Probably worse than before.
I'm glad you said it, Chuck. Sorry for beating you to the punch.
No, look, I'm glad we were in the same boat. Yeah. Let's talk a little bit about OpenAI. According to an exclusive from the Wall Street Journal, the SEC is investigating whether or not OpenAI investors were misled. This is something that is normal as part of basically what you saw in December when a company, goes through a bunch of upheaval in a 1-week period. Regulators typically come in and are like, hey, was there anything weird or funky going on here?
Well, especially given the quote from the board that the CEO hadn't been, quote, consistently candid in his communications.
Yes.
Right.
So,
that one speaks to exactly what the SEC wants to know is did you make misleading statements to potential or former investors?
Right. So it's unclear if there's anything material here. I don't think this is anything where you say that there's a problem definitely or not a problem. I think the SEC is going to go in, do their due diligence on this, and figure out, hey, was there anything here? Quite honestly, I don't know because still what happened is fairly opaque aside from just how poorly it was handled by the board when they went through, was it 3 or 4 CEOs in 3 days? I think it was 4 in 3 days, including the same CEO twice.
Yeah. Sounds right. So the other piece to this is you have to remember that the potentially harmed investors here, you think about who it would be, right? OpenAI's for-profit arm was not exactly open to retail investors on publicly traded exchanges. We talked about Microsoft, VC investors, things along those lines. I suppose there might be some investors out there who bought Microsoft stock based on comments from Sam Altman, and so could you extend that pool of harmed investors if there's something to all this? Maybe, I guess, maybe. But then, did they actually experience any harm? Because Microsoft stock seems to be doing pretty well.
It's kind of hard to say that. Again, this is why I don't even want to speculate because I have no idea whether there's any there on this.
Yep.
It could be something. It might not be. The SEC is going to go in, look at what went on, and they'll make a determination. And
what we're talking about here is they'll go and review internal communications between executives to see, hey, what were you saying internally, and then what were you saying publicly?
Right. Well, is there anything material that you were saying internally that was different from what you were saying publicly? Is what they're going to look at on this.
Right.
Let's talk a little bit about Apple, or Apple as they're more commonly known. And I'll just read the first sentence from this Wall Street Journal piece. Over and over again, that's right, over and over again, Apple chief executive Tim Cook has been asked the same question. What is Apple doing about generative artificial intelligence? His answer, stay tuned. And it's getting at the idea that your major tech companies, Microsoft clearly, as we just talked about, has this tie-in with OpenAI. NVIDIA, the chip maker, is right on the forefront there. Meta is talking about their generative AI models. Google is going through some well-publicized flops with theirs right now, where I don't know if you
I saw.
Okay, I'm just making sure that you saw some of the stuff that's been going on. What's been your favorite mishap that you've seen from Google's Gemini AI, Mike?
Yeah, I mean, the historical stuff was pretty funny. So I guess let's cover what was happening here. They had this generative AI that could create images and...
Not just images, the text had problems too.
Oh, did it? Yeah.
Yes, this was the latest version they rolled out, had all kinds of issues.
So in particular, this one was rolling out what seemed to be a bias against generating pictures of white people. Or at least that was the allegations from some sides of the story, and certainly seemed like that when it asked to generate images of the founding fathers of the United States. So yeah, and then pulling it and trying to fix it, and yeah, it's been pretty messy for Google over the last few weeks.
So, but again, they're trying, they're failing spectacularly, and I want to get. There's more on that failure that I want to talk about in terms of what it actually means, but we'll get there in a little bit. But Apple is one of the few major tech companies that is kind of just biding its time. Like, they haven't really put anything out. I mean, and this also gets at, like, the question of what are we talking about when we talk about AI? Because when Apple introduced Siri, 8-9 years ago, the idea was, here's this artificial intelligence friend that'll help you do stuff, in your daily life. Google has one too. What is it? Hey Google, and Amazon's got their Alexa, but we're talking about generative AI, which is not tell me what the weather is, but rather, hey, write something about this, or draw a picture about this, or make a video about that.
Mm-hmm.
And investors are saying, hey, Apple, why aren't you doing this? And the reason why these questions are coming up right now is that Apple stock has not been doing great over the last, few months or so. It's down 5.5% year to date, trailing the S&P by about 10%, 11% now. it's completely flat over the last 6 months, and over the last 3 months, it's still down 4.6%. So investors are saying, hey, these companies getting all this buzz about AI right now. Why aren't you doing anything? It's coming up because the share price has been stuck in neutral for the last little bit.
Yeah, so they've killed off their car business. I'm sure you guys covered that over the last week or so. That was another Wall Street Journal report.
It was yesterday.
Was it yesterday?
Yeah.
That they announced that they were putting an end to that endeavor. And look, I mean, to some extent, Apple's never the first to market with just about anything, and so I wouldn't expect them to be first to market with anything on the generative AI side either. But look, every time this happens to Apple every once in a while, where you say, okay, you've had some amazing products that have had amazing sales. What's going to be the next big thing that's going to move sales forward? Is it AI? Is it your headset that costs $3,500? What's going to be the next big thing to push Apple into the next stratosphere of sales?
Let's take a quick break here. When we return, we're going to do a little bit of trivia, and then I want to discuss what is the real problem with Google's Gemini AI that they've now kind of had to scrap and go back to the drawing board on. We'll talk about that when we return after trivia.
The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
Planning for your financial future never stops, and with spring on the way, right now is the perfect time to take stock of your overall strategy. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and our new guide may help. It's called 9 Tips to Spring Clean Your Finances. If you're planning a significant purchase either this year or down the road, we've got important information to share that will help you understand the effect it may have on your finances. You may be retired or getting close to retirement, and if so, this guide is for you. Take the necessary time now to review your financial strategy and learn about what adjustments you can make that might benefit your planning. The guide is free, and it's yours today by calling 800-393-4001. That number again is 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Your next incredible vacation is just a click away. The United States Virgin Islands is the perfect place to enjoy sun, sand, great food, unbelievable beaches, a wide variety of water sports, and the relaxation you deserve. So go to usvi.com. Learn all about St. Croix, St. Thomas, and St. John. Each island is special in its own unique way, and all have plenty to offer as you decide where to travel this winter. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy the vacation of a lifetime. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about the basics of estate planning. Todd, Massachusetts recently raised their estate tax exemption to $2 million. Do people still have to plan?
Yes, it's a simple answer is yes, but let's think about it from a back to the basics standpoint, right? Some people think they don't even need a will, or if they have a will, that's all they need. First, I want you to know that a will is a won't. It won't avoid probate. It won't help you reduce estate taxes, which we're talking about. It won't help you protect assets from the nursing home, so it won't do a lot. So a will is really a won't, so please don't stop with a will. The reason you need to do a trust is this new exemption that you speak of went from $1 million to $2 million. So now with a trust, you are able to double that exemption by being a married couple and having a trust in place. You can shelter $2 million on the first death and $2 million on the second death to shelter $4 million. But you need a trust to do it. And while the exemption went up, which is good news, the cost of not planning just doubled. So very important to get your trusts in place.
Learn how you can avoid probate, eliminate estate taxes, keep your money in your family, and protect your assets from the nursing home. Request this brand new guide from Cushing & Dolan. It's called Back to the Basics. Call 866-848-5699 or visit LegalExchangeShow.com to request it. Cushing & Dolan have been helping families like yours for more than 30 years. Once again, the phone number 866-848-5699 or request it from their website LegalExchangeShow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Breaking business and financial news first throughout the day. Only here on the Financial Exchange Radio Network.
Trivia here on the Financial Exchange is brought to you by Applebee's. Choose from a variety of half-price late-night appetizers after 9 p.m., including half-price boneless buffalo wings, half-price spinach and artichoke dip, and half-price warm pretzels dipped in beer cheese. Gather with friends any day of the week at Applebee's and say hello to half-price appetizers served late night, because half off is just more fun. Now, that's eating good in the neighborhood. Void where prohibited, dine in only. Well, yesterday, famed comedian Richard Lewis passed away at the age of 76. Lewis began his comedy career in 1971, rose to prominence in the 80s as one of the biggest stand-up comics of that time, and concluded his career with a recurring role on the sitcom Curb Your Enthusiasm with his best friend, Larry David. The popular sitcom has been nominated 10 times for Best Comedy Series at the Emmy Awards. Trivia question today: how many times did Curb Your Enthusiasm win the Emmy for Outstanding Comedy Series? Once again, how many times did Curb Your Enthusiasm win the Emmy for Outstanding Comedy Series? Be the third person today to text us at 617-362-1385 with the correct answer. And you win a Financial Exchange Show t-shirt and be registered to win a $100 gift card to Applebee's. Be sure to include the keyword Applebee's in your text, and we'll give away that Applebee's gift card tomorrow. 617-362-1385, and the third correct response will be our winner. See complete contest rules at financialexchangeshow.com.
First, before we go further, I'd like to issue a correction. In my excitement to describe the leap year rules about, how many years there are where leap years actually happen, I mistakenly said that we were on the Julian calendar. We're on the Gregorian calendar and have been since, I believe, the late 1580s. The Julian calendar was, in fact, what the Romans used. It was created by Julius Caesar. And that was replaced by Pope Gregory the somethingth in the 1500s or 1600s, I believe. So
thank you for that correction, Chuck.
It's the Gregorian calendar, in case anyone was confused by that. I do want to talk a little bit about this Google Gemini issue that they have. So for those unfamiliar with it, what happened is Google released this new version of their Gemini AI. And it allowed individuals to generate pictures, and just without any prompting, you'd say, hey, generate me pictures of, a bunch of, 8th century Vikings, and it would generate a bunch of black and Asian Vikings, which is just historically inaccurate. There were no black and Asian Vikings. And everyone got up in a tizzy because woke this, woke that, and this is not the real issue. And I'm going to use some Twitter posts here from Yishan Wong, Wong was one of the original, not founders, but one of the first employees at PayPal back in the early 2000s. He then went to Facebook for 5 years and was their director of engineering for a while. He was then the Reddit CEO for a few years. So Yishan knows a little bit about tech. And what he gets at here is the problem is not that you ended up with a bunch of Asian Vikings. Like that's just historically inaccurate. And you
didn't
look
really
at,
harm anybody.
You're like, okay, what's the harm? It's not a big deal. The problem is that, because here's how Google tried to do this. If you look at what they actually tried to do, they said, look, we've got a global audience. We want to make sure that we're just not showing a bunch of white people to everyone. Fine, I understand it. The problem is that they built these prompts and they thought they were going to get one result, and they got a completely different result that they did not expect. And this is why this is actually important, is because when you're just drawing pictures of Vikings, it doesn't matter. No one gets hurt by this. Like, the 8th century Vikings are dead. They're not sitting here like, hey, that's not us. They don't care. They're dead. They've been dead for 1,400 years or whatever. 1,200. What matters here is if you ask AI to do something more important than this. If you ask AI, hey, we want to figure out how to minimize carbon emissions, just as an example, AI might say, kill all the humans.
Probably would.
Oh, that's kind
Solve
of
the
a
problem.
That's kind of a problem.
Yeah.
If you're asking AI, hey, I want you to, figure out how to make less traffic. Okay, get rid of all the cars. This is this is where you run into these issues and this is what Ishan brings up, is that yes, everyone focuses on this because, culture wars are like the topic du jour in terms of how we're looking at tech. But what really matters is when you ask tech to solve bigger problems than just making a picture, this is proof that you're getting completely different outputs than what you expected. And if all you're trying to do is build a picture, it's fine, because ultimately, great, now someone on their computer has a picture of Asian Vikings that they can laugh at because it's historically inaccurate. But if you ask AI, hey, I want you to figure out how to build like the tallest building ever, and it comes back and says, enslave 1 million people to build it? Oh, like, gee, this is kind of a problem. We didn't expect that. And that's what Ishan gets at here is you don't really know where AI is going to go with these things because it's artificial. It's not human. It doesn't have those built-in stops that say, wait, maybe this is bad. And that's the thing that's concerning here when you get beyond just drawing pictures and stuff.
We've seen the bias in some of these image generators for quite some time now, right? I've never used Google's, but I remember we were using image generation on OpenAI's version. And
it only makes good-looking people.
It only makes, like, stunningly good-looking people, which, again, maybe that's not surprising. It probably trained on, like, Hollywood movies and, or just general cable TV. You don't see a lot of ugly people on television. Reason that Chuck and I do radio,
hey, speak for yourself.
There's a reason I do.
I'm
radio.
Beautiful.
These things are filled with all sorts of probably unintentional biases, and like you said, it's not really harmful at the end of the day on some of these. But the bigger problem is that, the companies that are creating these had no idea that this was going to be the case. They had no clue.
I also have an AI tangentially related story that we need to cover.
Please.
Did you happen to see the pictures and the stories from the Willy Wonka experience in...
Yep.
Okay.
I didn't. What are we talking about here?
Look it up.
So,
You'll find it.
This company marketed this idea of this live-action Willy Wonka experience in Scotland somewhere. I forget exactly where it was.
Ooh.
And they made all these AI images of like, oh, look how great it's going to look. And then people showed up to a warehouse where there was like a rainbow and a bridge, and like it's very clear you're just in a big warehouse. And they paid like $45 a head to do this. The kids got a single jelly bean and a cup of lemonade, and then got scared by a made-up character who the AI prompts had like made up. There's like the saddest one Oompa Loompa ever because they don't have multiple Oompa Loompas, and all these families were just like, we spent this money because you showed us these pictures and they're not real. And this is kind of a problem here. And it basically is now being described as the Fire Festival for children. Which I just think is completely apt. It's like you see these pictures and it's like there's these whimsical, popsicles and lollipops and everything. And then you look at the actual pictures from it and it's a cardboard rainbow and it like a picture stuck on a wall, and it's just weird. Like it's not good. And some people are trying to say this is the danger of generative AI. I just think this is the danger of scammers because the Fire Festival happened without any AI.
Yeah.
And so,
but some of these pictures look like they could be real. Others don't, but some of them look like, oh yeah, this could be a real feature from this event.
Huh. So, with that, let's take a quick break, and when we come back, we've got our trivia answer, and then we're going to be joined by Todd
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have Debt Destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
The Financial Exchange and Veterans Development Corporation are proud partners of the Disabled American Veterans Department of Massachusetts. The DAV provides thousands of hours of voluntary services at our DAV medical centers and is the only DAV department in the country to lead a veterans housing initiative for single veterans and for those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit davma.org. That's davma.org. Protecting your assets is the key to a sound estate plan. Cushing & Dolan's new guide is called Back to the Basics, a complete guide to an estate and asset protection plan. In it, you'll learn about important issues like avoiding probate and potentially eliminating your estate taxes. Call 866-848-5699 right now and request your free guide today. Or request it online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Susan Powers from the Armstrong Advisory Group. With spring on the way and taxes due soon, now's the perfect time to review your overall financial plan, and our monthly guide may help. It's called 9 Tips to Spring Clean Your Finances, where we outline numerous issues that may affect you going forward, like evaluating any income changes for the upcoming year. It's important to understand how a difference in income might affect your long-term planning. Even if you're comfortable with your current plan, taking stock of potential adjustments may help further secure your assets in the future. Learn about this and other important strategies in our new guide called 9 Tips to Spring Clean Your Finances. Get your copy today by calling 800-393-4001. That's 800-393-4001, or request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about the basics of estate planning. Todd, Massachusetts recently raised their estate tax exemption to $2 million. Do people still have to plan?
Yes, it's a simple answer is yes, but let's think about it from a back to the basics standpoint, right? Some people think they don't even need a will, or if they have a will, that's all they need. First, I want you to know that a will is a won't. It won't avoid probate. It won't help you reduce estate taxes, which we're talking about. It won't help you protect assets from the nursing home, so it won't do a lot. So a will is really a won't, so please don't stop with a will. The reason you need to do a trust is this new exemption that you speak of went from $1 million to $2 million. So now with a trust, you are able to double that exemption by being a married couple and having a trust in place. You can shelter $2 million on the first death and $2 million on the second death to shelter $4 million. But you need a trust to do it. And while the exemption went up, which is good news, the cost of not planning just doubled. So very important to get your trusts in place.
Learn how you can avoid probate, eliminate estate taxes, keep your money in your family, and protect your assets from the nursing home. Request this brand new guide from Cushing & Dolan. It's called Back to the Basics. Call 866-848-5699 or visit LegalExchangeShow.com to request it. Cushing & Dolan have been helping families like yours for more than 30 years. Once again, the phone number 866-848-5699 or request it from their website, LegalExchangeShow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
As promised, we are now joined by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan. Mr. Lutzke, how are you today?
I'm never better, and you?
Doing well. When we talk about building an estate plan, Todd, how does someone figure out which assets are actually in their estate?
Yeah, great question. I mean, first of all, think of anything you own. Just start with the general idea. Anything you own is going to be an asset of yours, and so that's what makes up your estate. Life insurance, brokerage accounts, bank accounts, real estate, vacation homes, rental properties, anything you can think of. And I think that IRAs, people forget that, Roths, they're included in your estate. And so all those assets make up your estate. And that's what, people don't, in life insurance, people don't think a lot about that, but that also makes up your estate.
Todd, if someone has, a bunch of assets in their estate and they're saying, hey, I need to get an estate plan going, how do they pick an estate planning attorney?
So I like to give them like a 4-prong approach. I would say, the most important part would be, make sure the fee is a flat fee and that you don't, bicker about what the fee is. They should give you a flat fee. On the attorney's card, there should be a letters after the name. One is which is the ESQ, everybody has that, but there should be an LLM there. An LLM means that it is probably a master's in taxation. So you kind of want that when you're doing an estate plan, when you're picking an estate planning attorney. And I think, number 3, you want to make sure that when they, go to the board, first of all, they should go to a board and explain everything so that when you walk out of the office, you don't feel more confused than when you came in. If you do, then I'm not sure that it was explained in an educational, informational way. And I think number 4, the last piece would be, just check with the lawyer and say, how long do you spend each year doing estate planning versus, say, other kinds of asset or other kinds of law? And my feeling is if they don't say, all the time, 100% of the time, all 4 of those things together might make me say, maybe I need to get one more opinion. So I would say those are the 4 prongs in picking an estate plan, and folks are picking an estate planning attorney. But in order to get started, not only do you need to pick an estate planning attorney, but you need to get an understanding of what you want to do and getting back to the basics, which is the guide we're giving away. It's the end of the month. It's the last chance to get it. The guide we're giving away will help you do that. It's called Back to the Basics, and it's going to give you basically it's my legal recommendation to an estate plan, a hypothetical estate plan. And you can put your own numbers in there and see how it works, and it will educate you on all the basic documents as well as how this particular trust that I'm recommending in this estate plan works. And I think if nothing else, it'll help you get off the dime if you've never done any of your estate planning at all, and educate you in a way so that you're ready to meet that lawyer and then talk intelligently to the lawyer about what you want and what you expect in an estate plan. So last chance, it's the end of the month, folks. Back to the Basics is the guide. It's all about education. 866-848-5699 or legalexchangeshow.com. One more time, 866-848-5699 or legalexchangeshow.com, and you can download it right there.
Thank you for the time, Todd.
Always a pleasure.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Today's trivia question was, how many times did Curb Your Enthusiasm win the Emmy for Outstanding Comedy Series? That would be 0. Curb Your Enthusiasm has never won the Emmy Award for Outstanding Comedy Series. Curb has been nominated for 51 total Emmy Awards over the years, and has only won 2. Tom from Ogunquit, Maine, taking home the Financial Exchange Show t-shirt, and Tom's also registered to win a $100 gift card to Applebee's, which we'll give away tomorrow. And trivia is brought to you by Applebee's. Choose from a variety of half-price late-night appetizers after 9 p.m. because half off is just more fun. Now that's eating good in the neighborhood, void where prohibited, dine in only.
Mike, the FAA has given Boeing 90 days to come up with a quality control plan in order to address some of the shortcomings that they have with regards to, things like not putting bolts in door plugs and things along these lines. And I'll quote here, Boeing must commit to real and profound improvements. We will hold them accountable every step of the way with mutually understood milestones and expectations. Boeing then responded saying we have a clear picture of what needs to be done. Transparency prevailed in all of these discussions.
Well, I'm satisfied. Can wrap this up, I guess.
The question that I still have on this is Calhoun took over in late 2019 after the previous CEO of Boeing, Dennis Muhlenberg, left after the two 737 MAX crashes. Calhoun also during that time, by the way, was the chair of the board, so it's not like he was someone who, was free of blame or responsibility. Boeing stock over the last 3 years has underperformed the S&P 500 by about 40%. Over the last year, it has underperformed by about 26%. Year to date, it has underperformed by about 14%. Mike, if I am a major Boeing shareholder, activist investor, or whoever, how am I not demanding larger board changes and leadership changes, even without what the FAA is doing and saying about the company culture there?
It's a good question, right? We have people clamoring for board spots at places like Disney because they have – maybe the answer is just that nobody knows how to fix this company. Right?
Fixing airplanes is harder than fixing TV.
Yeah, maybe that's the answer. It's just there's no activist investor out there that wants to step in and say, I know how to fix the problems at Boeing. We're going to do X. I guess that's the simplest answer for me is, investors are probably not terribly satisfied, but does anybody have a solution to what seems like a genuine ingrained problem with quality control at a company that demands high quality?
Yeah, it's a real problem, and I don't know what the answer is going to be here.
The only answer that I've heard is that leadership needs to be taken over by engineers. Like, that's the only hints that I have heard from people is, hey, leadership has gone towards MBAs and accountants, and we need engineers at the helm of Boeing again. But it's not exactly a concise solution.
But here's the other part about this that's kind of fascinating. Is Boeing management is really well known for being obsessed with their stock price. It's like they like publish it internally a lot. They talk about it a lot. For a management team that is so obsessed with the stock price to be generating such poor performance for said stock, it's kind of remarkable. It's like, hey, the stuff that you're even targeting you're not good at.
Yeah. Yeah, I have no answers. Quite frankly, it doesn't seem like Boeing has any answers either. And it's terrifying for one of, we talk about the importance of the major tech companies in the United States and their impact on the stock market. But in terms of, the United States industrial machine, there aren't a ton of companies more important than Boeing.
No, Mike, in the entire world, if we're being honest, there aren't many more companies more important than Boeing. I know it's not valued at $3 trillion or whatever, but people don't realize how hard it is to build commercial aircraft that are reliable, cost-effective, and don't crash. It's really hard to do. China's been trying to build their domestic aviation industry for the last 20 years, and they, pun intended, can't get it off the ground. They're just they're struggling to get there. Boeing has so much know-how and so much capability, and it's just being squandered. And that's what's so disappointing about it is it's such an important company to the world because ultimately so much of what we can do today is, we can talk about Zoom and this and that and whatever, but the world exists because we can get stuff reliably from point A to point B. And a big portion of that is moving people reliably from point A to point B. I mean, whether for leisure and all of the activity that produces in the economy, whether for business travel and the actual business that gets done as a result of it, moving people is hugely important. And when you only have 1.5 companies in the world that can consistently produce the vehicles needed to do so right now, it's a real problem. And I'm not saying like Airbus is some great shakes, but they're not having these problems.
They are not.
They might be kind of uninspired and not like the most imaginative and not not the most intuitively designed aircraft, but they work. And Boeing planes can't say that in the last 5 years, and it's disappointing. Let's take a quick break here. When we come back, Stack Roulette.
Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network. Your next incredible vacation is just a click away. The United States Virgin Islands is the perfect place to enjoy sun, sand, great food, unbelievable beaches, a wide variety of water sports, and the relaxation you deserve. So go to usvi.com. Learn all about St. Croix, St. Thomas, and St. John. Each island is special in its own unique way, and all have plenty to offer as you decide where to travel this winter. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy the vacation of a lifetime. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
To be engaged, you must feel included and valued. The DAV Department of Massachusetts nurtures a culture where inclusiveness is a reflex, not an initiative, where there's a deep sense of pride, passion, and belonging that is unified in our shared commitment, dedication, and patriotism for our country. We know through experience that different ideas, perspectives, and backgrounds create a stronger and more creative organization that delivers better results for the veterans and families we strive to assist. For more information, visit davma.org.
Protecting your assets is the key to a sound estate plan. Cushing & Dolan's new guide is called Back to the Basics, a complete guide to an estate and asset protection plan. In it, you'll learn about important issues like avoiding probate and potentially eliminating your estate taxes. Call 866-848-5699 right now and request your free guide today, or request it online by visiting legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled 9 Tips to Spring Clean Your Finances. Mike, one of the things people need to look at starting out a year is whether or not they expect a major shift in their income, either higher or lower.
Yeah, I mean, a lot has changed in terms of how we work and just family dynamics over the last few years, contributions to how much you're going to be able to save and put out for the next year. And so just understanding where the income side of that budget is going to land for 2024 and doing that evaluation is an important step of the process.
The other piece to pay attention to is the expense side of things, in particular if you have one-time expenses that are going to be coming up, if you need work done on the house, if you've got car expenses or anything else, making sure you plan for that as well.
Well, how are you going to finance it? Do I have an emergency fund? Am I going to borrow money for a home improvement that I'm doing? Maybe I'm already retired and I'm on a fixed monthly budget from Social Security and maybe a pension, and I've got some big expense coming up. You might need to realign your portfolio for that coming expense. And so really just, again, comes mainly down to budgeting here, but thinking about where those income and expense numbers are going to land for the full year.
Our guide is titled 9 Tips to Spring Clean Your Finances, and you can request it 2 different ways. The first is by visiting ArmstrongAdvisory.com. The second is by calling 800-393-4001. That number again is 800-393-4001, or you can visit ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. There's only one show that follows Wall Street's continued volatility. Keep it here all morning long on the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. Visit the U.S. Virgin Islands and enjoy your next incredible vacation. Explore St. Croix, St. Thomas, or St. John, and enjoy pristine beaches, world-class dining, and fall naturally in rhythm with the heartbeat of the islands. There's no passport required or money to exchange. Go to visitusvi.com and book your trip today. That's visitusvi.com.
Mike, what do you have for Stack Roulette today?
I would like to talk about Kellogg CEO Gary Pilnick and his interview on CNBC. Was it yesterday? Day before? Recently. When asked about rising food costs in the United States and just how sticky they are, and his answer being, well, maybe people should be eating cereal for dinner. Eating cereal all the time. Good way to cut the budget in the American household. Quote, cereal for dinner is a low prep, low mess, and low price meal option so you can spend less time cooking and cleaning and more quality time with your loved ones every week.
Yeah. I mean, it's a low mess if you don't have toddlers.
Yeah, that's true. Also, I've tried at this stage most cereals that are on the market, and I'm fairly certain very few of them hit the nutrition categories that I'm trying to hit for my family around dinner time. But yeah, the host on CNBC tried to push back and give him an out here, like, hey, do you think maybe that could
Sure
be
about that?
poorly received by some people out there? And he's like, no.
I'll quote. The host said, hey, this might land the wrong way. And Pilnick said, no, it's landing really well right now.
Just double down.
Oh, that's interesting. It's interesting that you say that because, and I just wanted to make sure that we're clear on this. Kellogg's trailing 12-month revenue is $2.74 billion. That is down about 1% over the last year.
So where is it doing really well?
And that's in a time where inflation has been up, which means you're actually selling less cereal. So I guess the Raisin Bran isn't hitting quite the same way it used to.
And if
Just saying.
If I'm going to give in to my kids' request for breakfast for dinner, like,
It's
I'm going to make some
eggs
pancakes or eggs or sausage,
Mike,
something like that,
Mike, I got something, as long as we're talking about this, I got something I'm really excited about on that front.
Oh, boy.
Breakfast for dinner?
I was
That's
maybe soon. I was at BJ's last weekend, and just kind of strolling through the aisles as I do, and the the corned beef hash with the little potatoes that they have at every buffet at every hotel everywhere.
Yep.
Apparently those are made by Hormel.
Oh.
And I got a 6-pack of those. That again, first time I've ever seen those, because when it comes to guilty pleasures or not guilty ones, that corned beef hash, which I know is not good corned beef hash or anything, but there's just something about it that just hits me the right way. And so I got this 6-pack of them. I then made the mistake of being like, let me take a look and see how bad this is for you.
Oh, the sodium must be through the roof.
Yeah, that's a mistake.
You've
made a
one
huge
can,
mistake.
Mike, first of all, it's in cans, which is everything you need to know.
I've bought that before. Yep, got it.
And one can has, I think, 3 servings in it, and each serving has half of your daily intake of saturated fat.
Naturally. What you can also buy is basically clones of the McDonald's hash browns from Costco and other grocery stores as well. I've been loading up on those every once in a while. Also, a lot of sodium.
I go through the 5-pound packages of tater tots left and right.
I'm sure.
It's they're just fantastic. But,
what did you have for us for Stack Roulette, Chuck?
That wasn't it.
That was it.
No. Let's stick with food. Chocolate. chocolate prices are through the roof. Specifically, raw cocoa prices are through the roof. If you go back about a year and a half ago to September of September of 23. No, this is not what this time scale is wrong here. No, September of 22. Sorry, it was displaying the wrong thing. Raw cocoa futures were trading at $2,300 a ton. Today, they are about $6,000 a ton. And the reason why this is happening, there is a drought in Africa where a lot of cocoa is grown, and so you've got all kinds of problems getting the amount of cocoa that people want. And so chocolate makers are doing a few interesting things. First, they're obviously reducing the sizes of, different bars, just like we see with, a lot of different goods. But as an example, Kit Kat is rolling out Hershey is rolling out a new line of Kit Kats that are the chocolate frosted donut variety, which means that the bulk of the Kit Kat is not actually covered in chocolate like the traditional ones are, but only a portion is dipped in there, and so they can use less chocolate to make the same product.
Great. Kind of gross.
So there's this, and this is a problem for someone like me because I'm not a big dessert person or a big sweets guy, but chocolate is the one place that I really like, and this is an issue here. So I'm going to look into figuring out what we can do to ramp up domestic cocoa production and see if that's feasible.
Fairly certain that cocoa only grows within like 20 degrees of the equator. So
I can turn the heat up really high.
Yeah, that'll do it.
Should be fine and cheap.
Boston Beer CEO Berwick is retiring. Boston Beer, Sam Adams maker, posted pretty dismal earnings, and stock was down, I think, 10% the other day. And this is a space that I just don't know how you possibly keep up with the trends. Right, like 2021, it was all
it's
about
almost
their
become like
truly seltzer brand, and they were knocking the cover off the ball, and then the winds shift immediately, and you just cannot keep pace with it, I don't think.
It's almost like fast fashion now.
Yeah, it's extremely challenging. But I'll be the first to admit, I don't think that I have purchased a Boston Beer product in over a year.
No, I definitely haven't.
Taking a look at markets. Dow is off 86 points. S&P's up 4. NASDAQ up 42. So we got mixed markets at the moment. We're done for the day. We'll finish up the week tomorrow on the Financial Exchange.